I'm delighted today to be speaking to Paul Welch. Paul is the founder of millionplus.com and largemortgageloans.com. He is a recognised mortgage expert, and today, with all the uncertainty in the mortgage market, we're going to talk about some of the key things that our members should be thinking about. Let's see what he had to say. Welcome, Paul. Terrific to speak to you again.
David, hi. No, it's fantastic to be in Miami with you.
So we wanted to use this video to focus on some of the urgent things that are happening in the mortgage market that might be relevant to PCD members and perhaps their clients, but primarily for the professional audience. So just to come to the first question, should borrowers remortgage now or wait?
That's a very good question, and I know that talking to many people, clients, advisors, etc., the most important thing is when you're looking is to take independent professional advice. Running the numbers, taking into your life plan and what you're currently paying for your mortgage. So base rate in the UK today is 2.25%. There is the expectation that base rate will probably rise to nearer 4 potentially towards the end of this year. And the markets are already pricing in rises towards maybe even 5.5, 6 worst case scenarios for next year. So in terms of should they wait, the most important thing to do is seek advice now, run the numbers. Some customers may be in a fixed rate. They may want to look at what are the breakage costs, so early repayment charges. What does that cost me? What's the best rate in the marketplace for a 2, 3, 5, 10-year fixed rate? Factor all of that in and work out what your plan is moving forward. So yes, run the numbers now, look at the next 12 months out and try and plan accordingly.
So another key question is, should they remortgage now before the end of the term?
That's a really good question because lenders are already amending their criteria where existing customers can do what we call do a product transfer 6 months before the due date of their expiring fixed rate. So in the UK marketplace, there's circa about 100 billion of mortgages coming up and expiring over the next 4 months. So lots of people need to see what their options are, calculate the early repayment charges, do the maths and work out what's best for them. So should it be now or later? Review it now. So important to get independent advice now.
So Paul, you don't have a crystal ball, but will mortgage rates go up in 2022-23?
Unfortunately, yes, is the answer. No one knows because there are so many things that can happen. Obviously, we have the ongoing war, which if that was to escalate, no one knows what the impact would be on the financial markets, etc. But with inflation running ahead of where it should be, we're expecting base rate to potentially move from its present 2.25 to circa towards 4. In terms of base rate next year, the markets are anticipating base rate could be anywhere between 5.25% and 6%. But the truth is no one really knows. But yes, unfortunately, rates are going up.
So for those thinking about this at the moment, is it worth remortgaging early?
The most important thing is not to panic. Unfortunately, if you watch the news, you do feel pretty sad about everything that's going on. It's all doom and gloom and it creates a lot of unnecessary anxiety, and the chaos that we've seen in the last month during the last Prime Minister's brief reign hasn't helped many people. So should you remortgage early? The most important thing is to seek professional advice. Work out what your plans are the next 1 to 5 years. Are you looking to change job? Will you have further children? Are you looking to relocate? Are you going to downsize? Post-COVID, we've seen a lot of people that have left London. So they've sold London, they've moved to cheaper parts of the country, so their mortgages are less. So you need to look at the criteria, your circumstances. Is your mortgage portable? So you can transfer it from one property to another. The most important thing, as always, is to seek advice and talk about it. Everyone is unique and very special, and you have to treat it that way.
So is it a good idea to get a 5-year fixed mortgage at this time?
If you want budget certainty for the next 5, 10 years, then a longer term fix will allow you to get peace of mind. With so much uncertainty, with inflationary costs, energy prices, food rising costs, etc., if you want to know where you're going to be on a month-by-month basis, then yes, For individuals, it makes a lot of sense to be able to plan ahead, and 5-year fixed rates tend to be quite popular. But again, everyone's an individual. You can have part and part. Most people don't realise this. You could have half on a 5-year fixed rate and you could have half on a variable. That way you kind of get the best of both worlds, where if interest rates were to rise, you've kind of locked in for half of your debt. And if interest rates were to come back a little bit, variable money tends to be cheaper right now than fixed rates. So it's about you as a person, but yes, if you want to have peace of mind, to know where you're going to be financially, a 5-year fixed rate can make a lot of sense.
And what's the best fixed rate mortgage available at the moment?
Well, today, if you're looking to borrow below 55% loan to value, you're looking at a kind of a 5.43% rate from, and if looking at a 5-year fixed rate, today that'll be 5.34, but that's today.
And what can borrowers do if they're worried when they're coming off their existing deal, they won't be able to afford repayments?
Yes, I mean, that's a very good question. I mean, we've had a number of people phone us where they're getting what we call payment shock, where, base rates are now 2.25 when they probably arranged their mortgage, they were kind of near zero, 0.5%. And now when they're looking at new fixed rate deals, they're kind of like near 5.5%. So people's mortgages could double, which is frightening. And we've had a lot of people say, well, look, what do I do? How can I pay my mortgage? How can I pay my heating costs, energy costs? And how can I feed my family? Everything's increased. Now, in those circumstances, as always, get professional advice. It's so important. Look at the mortgage to see if you have the ability to switch from a repayment mortgage to interest only. Also have a look to see if the mortgage is portable, which may allow you to downsize from property A to property B to reduce your mortgage payments. Some lenders will allow you to have a payment holiday, where you can not pay your mortgage for a period of maybe 6 months to 12 months, which gives you a break to allow you to think about what's the right thing for you to do. Because these decisions, if you're under a lot of pressure financially, the most important thing is, please don't panic. Do not panic in these circumstances. I mean, when the TV is on and it's all doom and gloom, write down your numbers, do the maths, talk to a professional. There are options. Payment holidays, convert from repayment to interest only, check on your mortgage being portable, downsize. Most employers now will allow you to work remotely anywhere in the country. You don't have to live in the same city under the same pressures, etc. I know it's a big move, but if you want a kind of more balanced life with less stress, less financial pressure, moving from, say, London to Wales, London to Scotland, London to somewhere else in the country can make a lot of sense for some people.
So are you finding that borrowers are confused with current mortgage rates?
Yes, they are, because they don't understand that base rate is really only 2.25% today. And when they're talking to their professional advisors or their banks, the rates that are being quoted are nearer 5.5%. They don't understand that that's a fixed rate and there's a variable rate and that the two are different. But when they're looking at, well, hang on a minute, I've been used to paying 1.5, base rate's now 2.25, why am I paying 5? So yes, a lot of people are very, very confused, unfortunately.
So Paul, what would the key message be for borrowers at this time?
Please don't panic. Switch off the news, get off of social media, don't panic. It's scary. I mean, I've got staff in their mid-20s, they've probably never seen a recession, they've never seen interest rates rising so quickly and so fast, and also the thought of, how am I going to cope if rates are going to be 5.5%, 6%, 7%? You and I are a little bit older. I'm early 50s, and I've seen rates where they've been 12 and 15%. If you look at the long-term average, last 25 years, rates have been 5.25%. But it is going to be a massive change to so many people.
So Paul, we're here for the event tonight at East Hotel. Really looking forward to a great event. You've spent a few days here in Miami seeing intermediaries and seeing clients. What's your read on the market here locally? Are you excited about the opportunities that are here?
The opportunities are incredible. I mean, when you travel around the world with PCD at various locations, Miami is very buoyant at the moment. There's a lot going on, a lot of development, a lot of investment. trying to read the market is always difficult. Interest rates are only just starting to have an impact in terms of, if you read nationally today in the American news, that new listings of real estate all across America are down 22%. Sales that have been agreed are down 20%. So Miami kind of seems to have its own little bubble. It's a little bit of a tax haven. There's no federal taxes here. A lot of companies that maybe operate in South America have a headquarters based in Miami. A lot of people during COVID have relocated to the area. So supply and demand, I would say, is just starting to tail off a little bit. There's still a lot of demand. A lot of people come here and spend 6 months of the year here during the summer and then go back to either New York or other parts of the US when it's warmer in their own sort of local town. So it's a lot of activity, a lot of people moving, both local and international people here in Miami.
And you've looked at a number and visited a number of the developments that are going on around the city. How do you think activity here compares with other global megacities like London or Dubai or elsewhere?
I think right now Miami is very buoyant. I mean, I was lucky enough to be a guest at the Aston Martin residence locally. It's the second tallest tower outside of New York. Gross development value is in excess of $1 billion. They've sold in excess of 90% of the stock, catering for the world's wealthiest people. Some of the penthouses and the triple X. The triple X is circa $60 million. It's phenomenal. So there's only going to be a few global families that could afford to buy at that level. If you go to like Star Island, obviously Star Island, you've got David Beckham, Eddie Irvine, and a lot of very other uber wealthy people, famous people, and those kind of, if we call them mansions rather than villas, I mean, they're $20 to $100 million. So at the top end, if you're a billionaire kind of family, you tend to have a place probably in New York, a place in London, a place in Dubai, maybe something in the south of France. You have multiple homes, and if it's generational wealth, and I don't say you collect them, but you have them. So London right now is kind of slow. Dubai is buoyant because of the amount of people that have been, I wouldn't say displaced because of the war, but a lot of Russians and Ukrainians have moved to Dubai. And Miami is Miami. It's an incredible place.
And what kind of inquiries might you get out of intermediaries based here? Where's the sweet spot for people to work with you?
Ideally, with our $1 million+ business, that platform gets 5 million viewers per annum, where people want to buy and sell things above $1 million. And whether it's $1 million or £1, I mean, we were close to parity recently. We're getting a sense of a bit of normality with the currency coming back. But, above $1 million is where we would really start. And if you're looking at margin lending, Lombard lending, that can be any amount. We've had inquiries as high as 170 million, art collections at 100 million. What we tend to find is just as you're about to enter a recession, the wealthiest families position themselves to access liquidity so they can take advantage of the market. So right now, from an American perspective, we've seen a lot of people, American and also dollar-based economies, have got more purchasing power. So even with the correction with the dollar and the pound rate, your US dollar buys you 15% more. And if property prices, according to Knight Frank, for next year drop 10%, you're effectively buying London at a 25% discount. So that will always create great opportunities from a dollar-based economy or a dollar-based perspective right now.
And we went for a great dip in the sea this morning at South Beach.
Fantastic.
Looking forward to a refreshing dip. This is something that's a bit of a phenomenon for you now, isn't it, really? People just enjoy interacting with you. I mean, tell us just why you're passionate about it and the impact you feel it has on people.
No, agreed. I mean, I've had my own personal challenges with my daughter being critically unwell for a while, but we managed to have surgery at Great Ormond Street with her. And I call him my psycho, but our child psychologist, when our daughter was unwell, when I was struggling with not being able to, when you have children and your daughter or your son is unwell and you're not getting answers, you don't know where to turn to. You may go to a church and you may pray, But when you're struggling, you need to really find a peace or a sense of balance or purpose. And so John, that helped our family, suggested I just jump in the sea. And I said, are you crazy? I mean, this was like December, January time, a couple of years back, and the water must have been 5 or 6 degrees. And I said, are you nuts? And he said, no. He said, the way you're carrying on, you're going to be nuts. So you better get on and do it. So for me, you know, a lot of people follow Wim Hof. So that's WIMHOF. I mean, his wife, unfortunately, committed suicide. She just jumped out of a 10-story building. And then he had to find the reasons for him to carry on, the strength. And I think for me, you know, I shared with you a message that I had yesterday from someone who was grateful for me sharing my own sea swimming, cold showers, educating people about Wim Hof. And I think when you talk from a male perspective, kind of historically, you know, it was the man would go out and work, the woman would stay at home, raise the family. The world's moved on and everyone can do whatever they want to do and whatever. And it's so difficult that if you say the wrong thing or the right thing. And I think sometimes, you know, talking about the individual yesterday that I shared with you, just to give you an insight to the people that need help. But sometimes it takes a lot of courage to pick up a phone and say, I need help. You know, I think men probably struggle with that more, I think. But for me, the sea swimming, you know, has been a kind of, I'm say a lifesaver, but it certainly helped me. And when I was struggling the most, I would go 2 or 3 times a day just to try and get a sense of balance, clearing my head. You know, if you're agitated and you're feeling anxious, you know, you get in some cold water. If your blood pressure's high, you get in some cold water and you can go from like 3 to 12 minutes. That really does lower your blood pressure. It clears your head. Your aches and pains disappear. And for me, it gives me a, you know, like this morning swimming. I mean, okay, it was a little bit warm. It's like 25 to 26 degrees. It was like a warm bath. But for you that don't swim on a regular basis, you're like, well, that was fresh, you know. But all I would say to people is, you know, if you need help, I will always help. I will talk, you know, call me, message me. It's so important just to talk. And you know, the message from the guy yesterday who was struggling himself and hadn't been working for a number of months, there must be so many people out there that are struggling, but they don't know what the solution is. And I think you've got to find, whether that's church, prayer, meditation, breathing, sea swimming, exercise, finding balance. And I think so many people do not find the time to look after themselves. You know, the doctors tell you, oh, you must exercise 3 times a week, 30 minutes, get your heart rate above 150, you know, but how many of us actually do that? And like for me in my own daily routine, I'll get up, I'll breathe, meditate, swim, a little bit of exercise. My daughter does meditation and breathing. And that was the one thing from her perspective that as parents, we were crying our eyes out because she'd been so unwell that we got a professional breathing specialist in and did proper deep breathing, real deep breath breathing to get the diaphragmatic breathing. And you can switch your body from fight or flight mode into calm mode. The power of the breath, from what I've learned, has been unbelievable.
I've enjoyed spending some time with you over the course of these trips. Your phone's constantly buzzing, there's deals on the go, the travel, you're in Zurich next week, you're with us in Dubai the following week. What's next for the rest of the year? What kind of keeps you going and keeps you getting out of bed in the morning, you know?
I mean, I came to Miami Sunday night because I wanted to get a feel for the place. We fly back to London tomorrow night. Saturday I'm in London. I fly to Zurich. Sunday I'm in Zurich, Sunday, Monday, Tuesday. I'll probably go back to Guernsey Wednesday. I fly out with you for Dubai the following week on the Monday to the Friday. I'll come back. It's finding the balance between family, work, staff, and then also, if you're being selfish, me. You know, what do I need to do to look after me? How can I be my best self for everyone, both as a father, you know, a parent, a husband, a CEO, clients. I think finding balance is the one thing I've learned. if you're working, you are working. No distractions, total focus. And when it's family time, switch off your mobile. You know, so many people always have their mobile phone on or with them, even at weekends. You know, switch it off. You know, take it away from you for like a Saturday or a Sunday and have quality time. And I think when I'm traveling lots, you know, my little boy's 3 years old. He says, "Daddy, why are you going again?" My eldest daughter's 11 and 14. "Daddy, you don't need to do this. You have staff." And it's like, I love meeting people. I love experiences. Maybe back in the day, our family might have been a gypsy family and we traveled around so much. But no, I love what I do. I'm passionate about what I do. I like helping people. It's fun. It just happens to be, you know, we might be buying and selling luxury items. We might be financing things, finding people money. Whether it's 100,000 or 100 million, it doesn't really matter. It's just helping someone. So yeah, I look forward to Christmas, and that's probably the quietest time of the year for me, where probably for a period of 2 or 3 weeks, the phone stops ringing. My challenge is I would then like to go away with the family, and at this time of year it'd kind of be Dubai or somewhere where you've got sunshine, but they just want to be at home.
Yeah.
You know, they just want to be at home with their things, and it's like, daddy, let me show you this. It doesn't matter about the money or the things you have. If for them and children, and you may feel the same, it's, let me show you a drawing. Or daddy, look at my gymnastics. I've just done this. Or your little boy says, "Oh, daddy, I can header a football." You know, and the real peace of life and the real enjoyment comes from things that are free. Family, friends, laughter, they don't cost a great deal, and they probably make you the happiest.
Well, terrific to speak to you today, Paul, as always, and I look forward to seeing you tonight for the dinner.
Thank you, David. It's been absolutely amazing to support you, and I look forward to supporting you and your business next year through many events. Thank you.